for the sixth question, which is P334, consolidated worksheet at the end of the first year of ownership. Okay, so this is still similar with the previous question data, but it is already given at December 31st, 2008. Okay, so you already have the sales, COGS and other expenses and the dividends also. So the first one is we need to prepare any equity method entries, and then we do the consolidated worksheet for 2008. Okay, so for the first year, remember we have 3 journal entries to do. Okay, although we have done the same investment entries for the last question, we need to do it again because it is considered as the new question. Okay, so remember to do the 3 journal entries, which is the first one is the purchase of the subsidiaries, and then the income from the subsidiaries, and then the dividends from the subsidiaries. So again, for the first entry is about the purchase of the subsidiary, which is debit investment in Snoopy stock, credit cash 270,000. Okay, so because peanut company purchase only 90%, so it is 270,000. And then the second one is about the income from the subsidiary. Okay, so debit investment in Snoopy stock, credit income from Snoopy. So you can directly take the number from the trial balance, 67,500. Okay, the third one is about the dividends, okay, which is debit cash, credit investment in Snoopy stock. Okay, 18,000 is from 90% times 20,000. Okay, so it's $80,000. That's for A. We go to B, which is about the consolidation worksheet. So remember, always do the elimination entry. Okay, so this is about the basic elimination entries. If you want to do the the book value calculation first, it is okay so that you are clearer to see the numbers that you need to put inside the basic elimination entries. Okay, if you don't want to do it, it's also okay. So like the usually you do is debit common stock, debit retained earnings, okay, at the basic value, okay, 200,000 and 100,000, and then income from Snoopy 67,500, okay, which is 90% from the net income of Snoopy. Okay, and then the NCI and I of Snoopy 7,500. It is 10% of Snoopy's net income. If you want to calculate first the Snoopy's net income is from sales 250,000, you minus with the COGS 125,000, and then minus depreciation expense, minus selling and administrative expense. So you will get 75,000 for Snoopy's company net income. Okay, so if you want to distribute it to the non-controlling interest, is only 10%. You times 10%, so you can get 7,500. Okay, for the dividends declared, you put it all, which is 20,000. Then the investment in Snoopy stock, it is already updated. Okay, so it is from 270,000 plus 67,500 minus $18,000, so you can get 319,500. Okay, so for the NCI and A of Snoopy, 35,500 is from 10% of the common stock and retained earnings, which will become 30,000, and then you plus the net income that the non-controlling interest get from Snoopy, which is 7,500, and then you minus the dividends distributed to the non-controlling interest, which is 2,000 only. Okay, so to make it clearer, this is from 300,000 times 10%, and then we plus 75,000 times 10% minus 20,000 10%. Okay, so this is the book value of Snoopy. This is the net income of Snoopy. This is the dividends of Snoopy. So you will get 35,500 for NCI and A of Snoopy. Okay, again, you can do the optional accumulated depreciation entry. So if you notice that at the trial balance is 20,000 because it is already added with 10,000. So remember, we always need the beginning balance of the accumulated depreciation. So it's 20,000 minus 10,000. So it is 10,000. Okay. After all of the elimination entries are already been made, you can go to the consolidation worksheet. Okay. So we will begin with income statement. Okay. It will begin with sales for both company, and then COGS, depreciation expense, selling and administrative expense. Okay, so you put it all inside the worksheet. And then remember, it come from Snoopy. Okay, come from Snoopy. Then we sum it, become consolidated net income. Yeah. So remember, because this is less than wholly owned, we have NCI and NI of Snoopy. Okay, and then we add control interest in net income as the last row of income statement. So we go back to our elimination entry to see which entry that is related to income statement part, which is income from Snoopy and NCI and NI of Snoopy. Okay, so we put it on debit side for each of them. Okay, after that we sum the debit credit side of the elimination entry for income statement part. Okay, and then after that we go to the consolidated column. You just sum all of the components. Okay, remember, income from Snoopy must be 0. Yeah, so we get the consolidated net income, and then because this NCI in NI of Snoopy is on debit, so it is minus. Okay, so 400,000 minus 7,500, we get 392,500. So it is the same with the parent's company net income. Okay, so remember, the way to check whether it's correct or not, you need to see whether the consolidated column's net income is the same with the parent's company net income. Okay, and then after that we can go to the statement of retained earnings. So we move the numbers from the balance sheet, the trial balance. Okay, so we move the beginning retained earnings. Okay, and then the net income, remember, we take it from the last section. Okay, the whole row. Yeah, the whole row. Okay, and then dividends also, we take it from the trial balance. Okay, so you calculated it, become the ending balance of the state of the retained earnings for both company. Okay, and then we go back to the elimination entry to see which entries that will be related with statement of retained earnings. So of course, retained earnings and dividends declared. So we put it on debit, and then we put it on credit for the dividends. This is from the last section. Okay, so you sum and then minus this, and then sum minus this. Similar also, this is you need to add. Okay, because it is negative number, we need to add it to decrease. And then we check it for the ending balance of the consolidated column. Is it the same with the parent's company? If it is the same, then you can continue to the balance sheet. So you put all of the accounts from the trial balance: cash, accounts receivable, inventory, investment, land, buildings, and equipment, accumulated depreciation. You put it. Okay, and then from accounts payable, bonds payable, common stock, retained earnings, and don't forget NCI and A of Snoopy. Okay, for the liabilities and stockholder security section. Remember that for the retained earnings, you need to move it from the last section. Okay, you move the whole row into the balance sheet. Okay, so make sure that it is already balanced for each company, and then we need to go back to the elimination entry to see the remaining entries that is related with balance sheet, which is common stock, and then investment, and NCI and NA of Snoopy, and accumulated depreciation. Okay, so we debit the common stock, we credit investment and NCI and NA of Snoopy. This is from last section. Okay, and then the accumulated depreciation and buildings and equipment. After that, you sum your debit credit column. If it's balanced, then it's correct already. You can go to the consolidated column. So you sum it. If it is on credit, you need to minus it. So for accumulated depreciation, always plus to reduce the number. Investment will be always 0. And then same with accounts payable and bonds payable. The common stock you need to minus is 200,000. The retained earnings is the same. Need to minus 175 plus 20. Okay. And then NCI and A of Snoopy, you need to put it on the consolidated column because it's on credit side. Okay. So if it is already balanced, then it is correct already.